It is a regulation that allows you to avoid capital gains tax. Normally, when you sell the home you actually lived in, it is exempt from tax. But even after you move out, if certain conditions are met, the property can still be considered your main residence for up to 6 years. This means that even if you rented it out, it can still be treated as your home and you can reduce tax. So, what are the conditions? Remember these 3. First, it must have been a property you actually lived in. Second, you cannot choose another home as your main residence at the same time. Third, if you rented the property, it can be recognized for up to 6 years. Here is the important point. The 6-year opportunity is not limited to once. If you move back in and live there again, the count resets, and you can use another fresh 6 years. However, partial rental or business use is an exception. If only part of the house was rented, tax will still apply. Also, if you are a non-resident at the time of sale, in most cases, the exemption does not apply. That is why being a resident under Australian tax law is a very important point. For those who still find this complicated, here is a simple example.